Employer compliance and reporting requirements. The Aca Employer Mandate and the Individual Mandate both place new reporting requirements on employers. The reporting requirements are Congress's means to make sure the IRS can verify employers are offering affordable minimum value plans or paying the penalty, as well as to help enforce the individual mandate. Employers subject to the employer mandate will utilize C forms. Form 1094-C to file with the IRS, and Form 1095-C to furnish to their full-time employees. In regards to reporting for the individual mandate, these are the B forms, Form 1094-B to file with the IRS, and Form 1095-B for the responsible individual. So who must file C forms? Employers must file C forms if they employ 50 or more FTEs. If an employer employs between 50 and 99 FTEs, they must still file C forms for 2015 by using special indicator codes. Additionally, every employer that is part of a controlled group is responsible for filing the C forms, even if the underlying employer member is below 50 FTEs. There are two ways to file C forms with the IRS, electronically or on paper. Electronic reporting is mandatory for employers who are filing 250 or more C forms. Employers with less than 250 C forms may file electronically or on paper. If filing electronically with the IRS, the employer must submit by March 31st. If filing on paper with the IRS, the employer must submit on or before February 28th. There are also two ways to furnish C forms to full-time employees, electronically or on paper. The only way an employer can furnish a C form electronically is if the full-time employee consents to electronic delivery. In all other cases, the employer must furnish a paper copy of the C form. Regardless of whether furnishing electronically or on paper, C forms must be furnished to all full-time employees on or before January 31st, following the end of the coverage year. There are some additional items you should know about C forms. Employers do not need to send C forms to part-time employees, or those who work on average less than 30 hours a week, unless they are self-insured and the part-time employee actually enrolls in coverage. The IRS will not impose penalties if information on C forms is incorrect or incomplete, but only if the employers show a good faith effort to comply. Employers may designate third parties to file with the IRS and furnish forms with full-time employees, but the employer remains liable for compliance. The IRS also allows for simplified reporting for employers that choose to take advantage of qualifying offers. Now let's move on to the B forms. Who must file or furnish B forms? Insurance carriers offering fully insured group plans and individual market policies must file B forms. Employers with self-insured plans must file B forms as well. Note that COBRA and retiree coverage counts for filing and furnishing purposes. Also, employer members of an MEWA, as well as employers that are part of a controlled group, must file or furnish the B forms. Like the C forms, there are two ways to file B forms with the IRS, electronically or on paper. Electronic reporting is mandatory for insurance carriers or self-insured employers who are filing 250 or more B forms. Insurance carriers or self-insured employers with less than 250 B forms may file electronically or on paper. If filing electronically with the IRS, you must submit by March 31st. If filing on paper with the IRS, you must submit on or before February 28th. Also, like the C forms, there are two ways to furnish B forms with the responsible individual, electronically or on paper. The only way an insurance carrier or self-insured employer can furnish electronically is if the responsible individual consents. In all other cases, B forms must be furnished on paper copies. Regardless of whether furnishing electronically or on paper, B forms must be furnished to all responsible individuals on or before January 31st, following the end of the coverage year. There are a few other items you should know about the B forms. First, the U.S. Treasury Department allows self-insured employers to combine C form and B form reporting to satisfy both reporting requirements on one single form. Second, the IRS will not impose penalties if information on B forms is incorrect or incomplete, but you must show a good faith effort to comply. Finally, self-insured employers may designate a third party to file with the IRS and furnish forms with responsible individuals, but the employer remains liable for compliance. Certainly, this new layer of reporting, both to the IRS as well as employees, is a challenge for many employers. However, having a basic understanding of the requirements so as to make a legitimate effort toward reporting will help avoid unnecessary costs and much more complexity down the road.